This is the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on August the 9th, 2013. Our time is 8:39 in the morning. Our radio show on your favorite radio stations. We're also archived on Harold's websites, HESradio.com and RareColoredDiamonds.com. You can listen to the radio show streaming there as well. We have a podcast through iTunes. Go to iTunes, World Financial Report on radio. The show is portable. iPad, iPod, iPhone, and Harold does daily market commentary on his websites. You'll find that commentary on the iTunes site as well. As we start today's show, just a quick note. Worldwide Precious Metals, they're going to be in Toronto. And if you would like to book a private information session with them, they're going to be there in October. Call them at 1-866-623-2002. 1-866-623-2002. The website is wwpmc.com. You can connect with them. They would be happy to meet with you for a private information session in Toronto in October. On today's show, Greek unemployment for adults, 27.6%. Youth unemployment, 65%. Mentioned last week in the United States, 953,000 jobs created, 77% part-time, 731,000 part-time jobs. Here's a real tough one. 40% of U.S. workers now earn less than the 1968 minimum wage. The minimum wage in 68 was $1.60. You factor in inflation, gives you a rate of $10.74. 40% making less than $20,000 a year. And Harold, a sad day for those that live in Edmonton. It was 25 years ago today. Of course, in some other markets, they're probably cheering. But in Edmonton, it was a very sad day. 25 years ago today, Wayne Gretzky was traded to the Los Angeles Kings, and I know that you have always been a huge Wayne Gretzky fan.
You bet, and 25 years has already gone by. Where is time going, Randy?
I know.
Where is time going? Wayne Gretzky, one of the greatest of all time, the greatest of all time, and again, he changed hockey. There's no doubt about that, and really did wonderful things for expansion and all that. Obviously, as Canadians, we wish he would have stayed in Canada and stayed with Edmonton. It would have been one of the great dynasties of all time, but still, he gave us tremendous, tremendous pleasure over the years. So we love Wayne Gretzky. There's no doubt about that. I always remember him saying, where most guys go to where the puck is, I go to where the puck is going to be. And I've always used that in my life type of thing. You know, Wayne Gretzky is the great one. Anyways, Randy, those are very, very frightening numbers. You know, Greece, 28% unemployment, those are depression-type numbers, and 65% unemployment among college kids basically is going to bring a lost generation. Just think about it. Those 65% that cannot get a job, what do? They can't pay back their college loans. They can't get a job. They've got to live at home with their parents. They're not in a position to make any money, so they're not going to get married, not going to have children, not going to be productive in their life. It's a horrible situation, and it's not only in Greece. It's in Spain, it's in Italy, it's in Portugal, and it's in the United States. You know, you can't really believe the numbers that are coming out of the U.S. at this point. As we've been saying for the last several years, desperate times bring on desperate measures, and, you know, it's quite obvious at this point here that the government comes out with numbers that just don't make any sense. I don't understand how the unemployment numbers dropped last month, when the fact is that there was hardly any new jobs created. I don't consider, as do most, part-time jobs new jobs. You know, the fact is that if you were employed back in 2007, 2006, and you were in the mortgage business or in the stock business, or you had a very good job and you were making 100, 200, 300, 500,000 a year, those same people now would be lucky to be making 30, 40, 50,000 a year. That means that the economy does not get better because nobody is spending any money. You know, the thing is that when you look at how severe the market crash was in 2008, not only the crash in the stock market with Lehman going under and the derivatives markets going down, but on top of that, you had the mortgage crisis and the banking crisis. And you remember that almost all the banks in the United States went under. And then, the Federal Reserve and the government got busy, and I must say they did an excellent job of stopping the damage, at least temporarily, and they did what they had to do. They had to print a ton of money, to the tune of about $17 trillion. They put it back into the economy. They bailed out major corporations. They did what they had to do to get the job done, and I had a lot of respect for what they were doing at that point because, again, you were talking about an almost impossible situation. People were panicking. The banks were going under. The stock market dropped from 14,000 down to 6,500. People were losing their jobs. People were losing their homes. Their homes were being foreclosed on. It was an unbelievable situation that, again, almost destroyed this country. And in actual fact, they did stop that. They put a ton of money into the market. They printed, they did quantitative easing, and they stopped the slide. And that was an excellent thing that they did. The problem is that they anticipated that all of the money that they put into the market was going to have a greater effect in a much shorter period of time. So between 2008 and 2013, you're talking over the last 5 years, the major problem is that the economy is not improved. And they were banking on the fact that putting all the money back into this market, quantitative easing and everything, was going to help the corporations that were going under. If you remember, AIG and General Motors went bankrupt, and all the banks were almost going under, and basically they stopped it. And General Motors is a new company now, but it's doing okay, and the market and the economy seem to be getting back on track. But the problem is, over the last 5 years, it hasn't done well enough to really right the ship. And now, because it's taken so long, it's taken over 5 years, and really nothing has gained any momentum over the last couple years, the fact is that we're going to start to regress. And unemployment is one of the major factors here also. Unemployment is a huge concern because obviously if people aren't working, they're not spending, they're not paying taxes, and the economy cannot get better. And the reason that with the employment numbers, that most of the people that are being employed are part-time, that's primarily because of Obamacare. Major corporations cannot afford to insure all of their employees to the extent that Obamacare is dictating. So we are going to have a massive problem moving forward. As Randy mentioned at the beginning of the show, you've got 40% of the U.S. population that is basically making under $20,000 a year. That puts you into the poor category. On top of that, the middle class is decreasing, and you've also got a situation where, again, 100 million people are on food stamps. And then 75% of the U.S. population is living one paycheck to the next. So how in the world can we bank on the economy getting better? Because the fact is that it's now starting to regress. They had 5 years to really right the ship, and unfortunately, it just isn't working. And things are getting worse and worse in the United States. You look at the restaurants, they're a lot busier than they were back in 2008. There's still people that are making a lot of money, but unfortunately, that has shifted. It's really the top 1% at this point that's making all the money, and you're starting to see a lot of people in the middle class starting to drop into the lower classes, and it's a really unfortunate situation, extremely stressful. So, again, going forward, if the economy doesn't improve, there's no way in the world that we are not going to see inflation, which, again, I don't see any way in the world that we are not going to have massive inflation. And they're going to deal with that some other time, and they've shuffled that to the side. But, with low interest rates and money being basically at zero, interest rates are at zero, and the fact is that the dollar keeps on weakening and weakening. That's one of the reasons why the stock market's above 15,000. It has nothing to do with the economy getting better. It has everything to do with the weak dollar. And the weak dollar is buying less and less, and that's why the stock market is going up at this point here. But that's going to change also. There's a very strong feeling in the market right now that something isn't right. And the fact is that the stock markets at this point are not a safe place to have your money. I'd be very, very cautious going into September, October, November, December if you're sitting very heavy in stocks. Peter Schiff who is a prognosticator. He knows the markets extremely well. He's made amazing predictions over the years. A very, very smart man. You've got to read his articles this week also, because again, he's incensed by what's going on with the government. The numbers that are coming out are so wrong and so different than what everybody else seems to be seeing. Again, it's desperate times bringing on desperate measures. So again, nothing has really changed in my mind fundamentally in this market. I know we've seen gold go from $1,900 down to $1,300. We've seen silver go from $50 down to $12. And those are not normal market moves for a market like this. The fact is that the Commodity Futures Trading Commission, the federal government that monitors the U.S. markets, I'm absolutely shocked that they can literally sit there and say that the moves that came in gold and silver over the last couple of years are normal and of no concern to them. The fact is that it was an instigated drawdown in gold and silver prices, and it was started back in 2011, actually, when the exchanges raised the margin requirements, made it so expensive for futures traders to buy gold and silver in the market that they basically chased all the speculators out of the marketplace. And they're out of the market at this point. You know, the fact is that gold and silver have been down for the last 2 years. However, the fundamentals for the market have not changed at all. In actual fact, in my opinion and many others, the fundamentals are getting stronger and stronger. You know, it's the countries now that seem to be loading up on gold and silver physically, and it was the speculators in the futures market that liquidated their positions. And then you've got the physical buyers like us, the people that own the actual physical metal that are not trading it in and out of the marketplace. And we're the ones that I anticipate will end up making most of the money, because the bottom line is that if you're not in a heavily leveraged position like you are in the stock in the commodity market, where they'll force you out of the market, all we have to do is sit back and let the market do its thing. And there is still no doubt in my mind, because I have not sold any of my gold and silver, I believe that we are going to see silver not only break the all-time highs of 1920, but I definitely believe that we will see gold in the 3,500 to 5,000 range, and I definitely feel that we'll see silver trading at well over 100. So I'm still a firm believer in the hard asset market. In actual fact, most of the money that I invest goes right back into the hard asset market. And I think that that's really where the money has to go. It's all about capital preservation at this point here, because it's very difficult to make money in the markets right now. The real estate markets are not good. The stock markets are not good. It's very difficult to make any money. The smart thing to do at this particular point is to preserve your capital and have it in hard assets like physical gold, silver, and diamonds. Now, as we're taping the show on Thursday, by the way, gold was up substantially. We're back over the $1,300 level. To me, I'd really want to see two closes above 13 and a quarter to tell me that the market's going to start to go higher. We're trading right now at 13.11. The market for most of the week was below the 1,300 level, but then on Thursday the market made a huge move. Same thing with silver. We're up 14 cents in silver. We're back over $20 at $20.49. I do believe that we need to see silver get back over that $32 level, and then we'll start to see the market move up from there. We had a huge move in platinum and palladium on Thursday, and it's following through again on Friday. Platinum's up $9 at $15.03, and you got the palladium market up $3 at $744. The stock market's down 53 points today. It's been down 3 days out of 5 in the during the week in the market. The Dow Jones trading at 15,445. NASDAQ trading at 3667. The TSX is trading down 12 points at 12,540. The U.S. dollar has, where it moved up at the beginning of the week, has fallen substantially at the latter part of the week, which is another reason why gold went up as much as it did on Thursday, and the U.S. dollar is now trading at 81.06. Watch and see what happens when the U.S. dollar, when it breaks 80 cents, and we're not that far away from there. The Nikkei has been down most of the week at 13,615, and crude oil, which was down on profit taking, is now up heavy, up $1.60 today, and we're back up to 105 in crude. That's what's happening in the markets this week so far, Randy, and again, we've got to be very, very concerned about the overall world economy, not only the economy in Canada and the United States, but the entire world economy, because everything is tied into each other. I feel terrible for the people in Europe, in Greece, and especially the kids coming out of college. I mean, they put in their time. They've got their goals set. They can't wait to graduate and get out into the real world and make their mark on the world. And all of a sudden, it's like a lost generation. If something doesn't happen in Europe and something doesn't improve in the United States, there's not a lot of help for the kids coming out of college, and that's our next generation. It's a very, very frightening time.
We have a story in the newsletter this week, and you can get the newsletter from Worldwide Precious Metals. 1-866-623-2002. WWPMC.com is their website. Greece's unemployed young. A Great Depression steals the nation's future. Take a look at that article. It is a real eye-opener. There's only one company Harold recommends you use when it comes to investing in precious metals. That is Worldwide Precious Metals. A Canadian company out of Vancouver. Connect with them, 1-866-623-2002. The website is wwpmc.com. They're going to be in Toronto in October. If you would like to book a private information session, call them or connect with them via their website. They'll be more than happy to speak with you when they're in Toronto. And remember, they only deal in physical precious metals. Whether it's delivered or stored on your behalf, no paper promises. We're talking allocated, and this is wholesale or premium. And they have something new that they're actually offering different clients. They have a new program. They can now store premium bullion specified in coin and bar form in your precious metals investment account. If you would like to learn more about this new program, where obviously your investment is allocated, but you can have wholesale or premium, speak with Worldwide Precious Metals at 1-866-623-2002. WWPMC.com is the website. Top story in our newsletter this week from Egon von Greyers, interviewed by Eric King of King World News. Here is the frightening reality the West faces going forward. The United States is unique in the sense that it did not grow from invading and stealing from other nations. In fact, at one point, the U.S. was a colony itself, but the United States had enormous natural resources, and its people were very resourceful immigrants, so it grew into a superpower. But as is the case with all superpowers, the United States has now reached a point of decadence. This is when a nation or an empire stops producing and starts borrowing and printing money. This has been taking place in the United States for a long time. But like all past reserve currency nations, the United States is going down rapidly and is living on borrowed time. The U.S. currency has collapsed by 99% over the past 100 years. Of course, many other currencies have come down by that amount as well, but it's important to note that a country cannot maintain its reserve currency status if its currency goes down by 99%. This is why I say the U.S. dollar is living on borrowed time. The U.S. now has a federal debt of 17 trillion. So not only is the U.S. now issuing debt at an unprecedented rate, but the United States is also buying its own debt because nobody else wants to buy it. When you include unfunded liabilities, the United States now has a staggering $230 trillion of debt that can never be repaid. And debt that can't be repaid is worthless. Debt in the next few years will not grow exponentially. Instead, debts will grow hyperbolically. This is because it will become necessary to finance the U.S. government deficits and failing financial system and to finance the collapse that is still to come in the $1 quadrillion derivatives market. All of this will lead to the end of the U.S. dollar as the world's reserve currency. So how, in the light of this horrendous situation, do we actually preserve wealth? Well, two assets that will maintain their wealth in real terms will be physical gold and silver, but they must be held outside the banking system. Just looking at the metal in the short term, I see them rising from here. I think the correction we have seen is now finished, and I expect new highs for both metals, gold and silver, in 2014. And Harold, that's why we're saying have an allocation, we agree with Egon von Greyer's, have an allocation of precious metals in your portfolio today.
You better believe it. Again, you've got to read and understand, what is being said out there, because if you just listen to what's being said on television and mostly from Wall Street, you're going to get a distorted view. It's like anything else. You've got to do your homework, and you've got to take all of the evidence, and then you've got to make your own decision as to what you think is going to happen. Again, we've been doing this radio show now for going on 13 years. I've been in the investment business for 35 years. I've been through similar situations like this. And again, I've seen almost everything happen in the markets when things get difficult and things get, a little iffy with the governments type of thing. But we can work through it. As long as you don't put yourself in a situation where you're going to get wiped out, where you're speculating or you're taking unnecessary chances, we're going to get through these difficult times. And again, 90% of the money is made by 10% of the people. 90% of the people during these next few years are going to make the wrong moves. Because interest rates are so low, people are being forced back into the stock market, which is where the general public should not be. In the United States, the middle class lost their money because they lost it in stocks, then they lost it in real estate, and now they can't get a decent job. Again, the reality of it is no matter what the governments are saying and no matter what Wall Street is saying, and when you see the Dow going up and you think that you're missing out on something, understand why it's going up and why it's not for you. The smart money is on the sidelines right now. The smart money is not sitting in the stock market. If you're an insider on Wall Street and you've got, your inside information and you're dealing, with your friends on Wall Street, there's a handful of people that are making a fortune right now. They're making more money than they've ever made before, but the majority of people are not. And just by looking at your retirement savings plans over the last 10 years, that in 10 years, nobody has made any substantial money. So the fact is that we've got to be smart about this, because if you lose your money at this particular point, the chances of making it back are very, very slim. We want to make money. We want our listeners to do well, and we want everybody to have a good and stable life and have a nice retirement. But at this particular point, if you speculate in these markets, there's no way in the world that that's going to happen. The smart money right now is not in the stock market. The smart money is basically very conservative and looking at preserving their capital, not so much making profits. So when you look at a 1 or 2% return on your money in the bank and you say, I can't live on that, so I'm going to put my money back in stocks, just remember what happened in 2008 and 1999 to you, and that should hopefully let you know that that is not the right market for most people at this particular time.
Speak with Worldwide Precious Metals about starting your own precious metals investment account today. 1-866-623-2002. The website is wwpmc.com. Next week in Edmonton, for those that listen in Edmonton, we're going to be on at 2:30. Normally the show runs at 3. We're going to be on at 2:30 due to Edmonton Eskimo football in Edmonton. Speak with Worldwide Precious Metals, 1-866-623-2002, the website, wwpmc.com. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on August the 9th, 2013. It's a Friday. Our time is 9:04. Radio show runs on your favorite radio stations in Edmonton next week. The show will be on 2:30 until 3:30 due to Edmonton Eskimo football. Don't forget, if you ever miss a radio show, they are archived on Harold's websites, HESradio.com and RareColoredDiamonds.com. We have a podcast through iTunes. Go to iTunes, type in World Financial Report on radio. You can listen to the radio show on your iPad, your iPod, your iPhone, as well Harold's daily commentary from his websites. You can find it there too. It's portable as well. Connect with the only company that Harold recommends you use when it comes to investing in precious metals. That is Worldwide Precious Metals at 1-866-623-2002, the website wwpmc.com. And as I mentioned earlier, they're going to be in Toronto doing private information sessions in October. If you would like to book an appointment with them, 1-866-623-2002, the number to call, the website, www.pmc.com. And don't forget, when you start your own precious metals investment account, not only are you getting gold, silver, platinum, palladium, whatever you choose, but instant liquidity in and out of the market, secure storage, insured to the full value of your investment, 24/7 online access, and you'll have the use of a full-time precious metals expert from Worldwide Precious Metals. They have a new program in place you can ask about. They are now storing premium bullion specified in coin and bar form in precious metals investment accounts. And remember, all accounts are allocated either wholesale or premium. Ask them about that at 1-866-623-2002. The website is www.pmc.com. Now, Harold's websites for diamonds, rarecoloreddiamonds.com. rarecoloreddiamonds.com. You can speak personally and privately with Harold at 1-800-432-1022, 1-800-432-1022. And obviously, Harold has his auction site as well, hsfineauctions.com. The next auction is coming up on October 21st, and that is 8 o'clock Eastern, 6 o'clock Mountain. And Harold, I know that you're excited because you were on Bloomberg, and we had that clip, and we do have it in our newsletter. We'll be happy to send it out to people. You were on with Deirdre Bolton on Money Moves. We can send that out to you if you'd like to see it. But Harold is going to be back on Bloomberg prior to this auction. And Harold, you had some Liz Taylor diamonds with you, and they definitely caught a lot of attention.
They certainly did. You know, we've been very, very fortunate. And the longer you're in business, evidently better things happen for you. Bloomberg was tremendous for us. We did tremendous amounts of business, and we did sell Elizabeth Taylor's magnificent 95-carat diamond necklace and her 22-carat matching earrings. And I also have the last 8 pieces of Elizabeth Taylor's estate that has never been auctioned before. In fact, my wife is wearing one of the brooches now, and we have a picture of Elizabeth Taylor wearing it. Just some really stunning pieces. On top of that, I was very fortunate to have had the Cartier collection, which I had mentioned before, the Cartier collection circa 1930, and that collection was a one-of-a-kind. In fact, it's been in the Cartier Museum in Paris and other major museums for the last several decades, and it was given to my company to sell, and I want to say that we were successful selling the entire collection. Which was a huge, huge thing for my company. So we sold the Cartier collection, which was worth over $60 million. And now we were given the Van Cleef & Arpels collection and the Boucheron collection, which are being cataloged at this point and will be available to some of our clients. These are pieces that have been in museums for decades now and are some of the most amazing pieces from the Art Deco period. Again, a lot of these pieces will sell at times for 5 or 10 times what the estimates were. In actual fact, on Elizabeth Taylor's pieces, if you look at the auction results for some of Elizabeth Taylor's diamonds and pieces, her earrings, her Van Cleef & Arpels earrings that were supposed to sell at auction, and I have the list, by the way, and I'll send it to anybody who wants to see it. They were estimated to sell for $40,000 to $60,000, and they sold for $800,000. There was 3 sets of jewels that were to sell for under $100,000, and they sold for 8 times what the estimated values were. That's what's happening in the rare diamond markets today. So, again, I've never been more excited and more proud about what's happening in the diamond business, and a lot of it centers around my company. I take this business very, very seriously. You know, and 10 years ago when I wrote the article, Rare Colored Diamonds, the Best Kept Secret, nobody even knew about colored diamonds. I did an awful lot of work and studies on them and found that in 1979 and 80, when there was high inflation and gold went up 800%, these diamonds also went up 500% in 2 years. So they're a great hedge against inflation. They never decline in value. When we talk about investments that will sustain its value, that's exactly what we're bringing to you. But the true reward of it is not only does it maintain its value, and they never fall in value, but some of these diamonds and some of these pieces skyrocket in price. So the lucky bidder, actually, who won Elizabeth Taylor, who bought Elizabeth Taylor's 95-carat necklace and 22-carat earrings, has got a piece that is second to none. I also have her ruby and diamond necklace that was valued at over $10 million. We're going to be able to bring all of these to our clients. Now, again, some clients have the wherewithal to invest, 7 or 8 figures in these. Most of my clients are just hardworking, everyday Canadians, like us, Randy, that just want to do the right thing. We're tired of getting 1 or 2% on putting our money in the bank, and the bank isn't safe anymore. We know what happened last week with Cyprus when we had the report that they lost almost 50% of their money that was in their bank accounts. If that doesn't scare you, I don't know what will. Having money in some of these rare gems will not only protect your money for you, but on top of that, it will allow you to profit on them and to possibly sell them in other currencies if something happens with our currency. So it's a phenomenal asset, a very important asset, and again, I'm very pleased and proud to bring to you what we're doing with our business. Now, if you go to rarecolordiamonds.com, we have an investing in diamonds section, and that's going to be changed within the next 30 days to a learning center. Actually, my friends from Relentless Technologies came down a couple months ago to Florida from Vancouver, and they spent a couple days, and we did some shooting, and we did a educational video on diamonds. So that's going to be available. So what you're going to be able to do is go to our website, rarecolordiamonds.com. Instead of just looking at the historical price tracking system, we're going to have an entire learning center which will educate you on how to invest in diamonds. Then we have our loose diamond section, our exclusive jewelry section, which we'll be constantly updating, especially with these new collections that we just got. We always feature a diamond every week. And now we have a media and radio show section, so you can keep up with everything that's happening with the company, all of our radio shows and all of the media that is done on our company. And then at any time you can sign up for a private seminar. We do seminars from time to time. In fact, we do many of them, and they're large seminars, but you can watch these seminars from the comfort of your own home right over your computer. So if you're at home or you're at your office and you want to watch one of our seminars, it can be done either on a large basis, which we do almost on a monthly basis, but if you wanted one done for your family, or if you wanted done for a group of people that were thinking of investing in diamonds and wanted more information, it would be my pleasure to do a private seminar for you, and you never have to leave the comfort of your own home. And that's what we bring to you as education, so you can understand this market, because, again, it's a market that is not in the mainstream. It's an alternative investment, but it's so important that they not only had us on Bloomberg back in July, but now we're going back around October the 18th to talk about our next upcoming auction. And the real reason for that is that we created the only secondary market to resell diamonds. As somebody who's been in marketing for as long as I have, when I looked at the diamond business, I saw prices, I saw escalation of prices, I've seen what diamonds have done over long periods of time. I've done tremendous studies on them. But the one thing that the diamond business was lacking was a secondary market to resell them. In commodities, you've got the exchanges in Chicago and New York. If you're trading stocks, you've got the markets in New York. But there was never a secondary market that was legitimate that could resell clients' diamonds. Now, you do have Christie's and Sotheby's, but not everybody can buy $5 and $10 million diamonds. How about the clients that buy $20,000 yellow flawlesses and $50,000 Argyle pinks? Where is a market for that? And that was my biggest contribution to the diamond business. Now, we started it 3 years ago. We've had tremendous auctions. The last auction we had 17 pink diamonds up for sale. We had 2 Cartier diamond rings, signed pieces, and we had an orange diamond ring. And within 1 hour, every single diamond sold. We sold 20 diamonds in 1 hour. Who does that today? It's because of the auction business. And that's what we're building. And by the time our clients are ready to sell their diamonds 5 to 10 years down the road, we anticipate having a massive business that is worldwide that will give our clients what they need to liquidate their diamonds at phenomenal prices and possibly in other currencies. So again, that's what my company does. We are third-generation miners, cutters, and sellers of fine investment quality diamonds. My partners are third-generation miners. That means that they worked in the mines, they own the mines, they take the rough diamonds out of the mine, they cut and polish them themselves, and then they're given to me to sell worldwide as investments all over the world. With any other company, what happens is a diamond comes out of the mine as a rough diamond, then they're sold to cutters. And these cutters will cut and polish the diamonds, and they make a profit on that. And then they take these diamonds and they send them to New York, to the Gemological Institute of America, where they're graded. You never buy a diamond that does not have a GIA grading report. So once the diamonds are graded, they go back to the owner, the cutter, and he gives it to his salespeople, and they sell to dealers, and the dealers sell to jewelers, and the jewelers sell to you. Do you get the idea? It's very difficult to make money when you're going through 3 or 4 or 5 different hands, as opposed to we're the miners, we're the cutters, and we're the sellers, and we give them to our clients at the best prices that we can. Prices are constantly going up, and then we look to sell them down the road for you, and that's how we make our money. We get 10% of the profit. So we only make money when our clients make money, and I think that that's the way that things should be. So what's happening in the diamond market right now is almost unprecedented. What's happening in Europe is so frightening. 65% unemployment amongst college kids, almost 30% amongst adults. Nobody's making any money. They're petrified. Their currencies are falling. Diamonds are one of the safest and most profitable assets that you could possibly own. And at this point, our businesses are booming because we bring the type of diamonds that are affordable to the everyday hardworking man and woman. Now, obviously, with the numbers that we've heard in the United States today, where 40% of the people are almost in poverty, making under $20,000 a year, those are not our clients. But if you're a hardworking person, you put away money for retirement. Let's say, for example, you've got money in your retirement savings plan, and you find that that is not working for you. I'm not saying to sell out of your retirement savings plan, but what I am saying is that if you put $20,000 into your retirement fund, and you put that into a mutual fund, and then you take another $20,000 and put it into a yellow flawless diamond, for example, in 10 years, your yellow flawless diamond could be worth around $80,000. I highly doubt that your stock will be worth $80,000, though. So most of my clients, who are very conservative as we are, we put these diamonds away for safety and for retirement. You know, in 2003, I bought a 2-carat vivid pink argyle diamond from the tender for $350,000. Today, that diamond's worth $3.5 million. So in 10 years, that diamond has gone up 1,000%. Are there any other investments that you know of that rival that type of return? And that's what's happening in the pink diamond market. I was out for dinner with my wife and her girlfriends. She was wearing a 5-carat pink ring. She told me that 50 years ago, her grandmother bought that ring for $35,000, and now the ring is worth around $3.5 million. So the longer you hold on to these investments, the more and more and more they're worth. And the fact is that with the currency markets the way that they are and everything happening in Europe and the U.S. and everywhere else, it's amazing to own an asset that I could sell for you in England for British pounds or Japan for yens or China for wands or whatever is the best currency. So, again, it's a very important asset. Obviously, you never put all of your money into one investment. You should diversify. But during these particular times, where do you put your money? If you put your money in the bank, you're getting 1 or 2%. Again, nobody can live on a 1 or 2% return, but there are diamonds that return 15% a year. D flawless white diamonds return 15% a year and never, ever decline in value, and we offer those to our clients. We're the biggest cutter of D flawless white diamonds in the world. On top of that, we also have yellow flawless diamonds to start at $15,000 to $20,000, and they go up by 15% a year. Much better than having your money sitting in the bank and finding out one day that the bank closes just like it did in Cyprus, and you just lost almost all of your money. And the other diamonds that go up by 15 to 20% or more are the Argyle pink diamonds. And the reason for that is that the mine that produces them is going to close. And that mine's going to close in the next 6 or 7 years. There will not be any more pink diamonds, and the prices will continue to explode. So you don't have to sit back and keep your money in the bank and not make any return when you can take some of that money and put it to work for you in an asset like a rare colored diamond. Not only is it portable private wealth, and if you read any of the stories, in the newsletters or what's in the financial pages lately or whatever, some of them are very concerning. There are people out there that believe that the financial world as we know it is going to change. It's going to change abruptly, and if you're not prepared for it, you could suffer financially. We don't want to see that happen. That's why we're saying take some of your money and put it into a physical diamond. Not all diamonds are investment quality diamonds, so please don't just go out and buy a diamond because, it's $2,000 or $3,000 and you think you got a great deal. To be honest with you right now, there aren't great deals on diamonds. Diamonds are going up in price. Nobody really wants to sell diamonds for less than what they're worth. So the bottom line is that with everything happening today and as dangerous as the financial worlds are right now, there are certain assets that will do tremendously well. One of the reasons that they had us on Bloomberg was primarily because there's such a huge interest in alternative assets. We've been on several shows because of alternative assets. Bloomberg has been the biggest, and because of the last show and the success of the last show, we're going back on it, I think, on October the 18th to talk about our next auction. That's something that you definitely want to sign up for. You go to hsfineauctions.com. In fact, the entire catalog is going to be up at the end of August, and we're going to have some of the most amazing pieces that you have ever seen. So we're extremely excited about the diamond business. All you have to do is go to my website, rarecoloreddiamonds.com, and see what we offer versus what any of our competitors offer. Bottom line is that these are magnificent pieces. They're the most concentrated form of wealth in the world. They can be sold in other currencies. They never decline in value. They're portable private wealth, and if you hold on to them long enough, you're going to make a ton of money on them. So, again, Randy, everything that's happening in the diamond market right now is positive, and everything that you read in other markets right now is extremely concerning.
Our featured diamond of the week. This week's diamond is a 0.30 carat radiant cut, fancy intense pink argyle. If you had your heart set on a pink argyle, now is the time to talk to Harold. It's in the featured diamond section of the newsletter website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. You can find it in our newsletter as well. All the diamonds go with a video, and you can see the video online. And we also, as I mentioned before, if you did miss Harold on Bloomberg with Deirdre Bolton on Money Moves, we have that video. We can send it to you. But our featured diamond this week is a 0.30 carat radiant cut, fancy intense pink argyle. And Harold, everyone is starting to wake up to the fact that who knows what the potential for this market will be when the supply goes away. They create 90 to 95% of the world's pink diamonds out of the Argyle mine. When it shuts down 5 to 6, 7 years, maybe even sooner, you never know. That is really opening up Pandora's box because 90 to 95% of the world's supply will be gone. And when you think about it, it just boggles the mind as to what potentially could happen to the prices of these diamonds.
Well, if you go back in history, Randy, and look at when these situations have happened in the past, it's always been the same. I mean, it's economics 101, that when the demand for something is high and the supplies are low, the prices are going to go higher. With these Argyle pinks, most of the Argyle pinks are bought by jewelers. They buy these diamonds and they put them into magnificent rings and pieces of jewelry and necklaces and things like that, and the prices are astronomical. What we want our clients to do is to own these diamonds, and in many cases our clients put them into beautiful pieces of jewelry. We have the wherewithal to do that for you. We have the finest jewelers in New York that will make these into masterpieces for you. You can wear them, enjoy them, and then give them back to me in 10 years to sell. And in most cases, you're going to find that the returns from these investments will be far greater than anything that you've ever done before. In a lot of cases, we hand them down from generation to generation, and that's when these diamonds take on a life of their own, because the longer that you own them, the more and more they go up in value. And when the Argyle mine closes down, the people that do own these Argyle pinks for the next 10, 20 years will do nothing but make money with them. This will probably be the last time that we ever see a mine that produces 95% of one particular class of diamond. So if it's something that if we don't take advantage of at this particular time, we'll never get another opportunity to do this again, and that will be it'll be a shame. because, again, this is a market that we brought to you for the last several years. We've certainly done our homework, and as you can see by my website, if you go to the loose diamond section of rarecoloreddiamonds.com and look at our selection of pink diamonds, it rivals anybody's in the world. Nobody has the diamonds that we have. Nobody has invested as much money in diamonds as I have. And basically, we bring these for our clients to invest in and give it back to us in 10 years to sell for you. My children own diamonds. My grandchildren own diamonds, and they've all done extremely well. All you grandparents out there and parents that want to make sure that your kids have something, to start their life with, look at a yellow flawless diamond around 15 or 20,000. Look at an argyle pink starting at about 25, 30,000, or look at a D flawless white, a perfect white diamond. I presented those on Bloomberg and everybody flipped over them. They're perfect in every way, and they go up by 15% a year, except during times when the stock market is down. And these diamonds are negative correlated to the stock market. In 2008, when the Dow dropped 50%, these D flawless whites went up 50%. So, again, these are one of the best assets I could ever bring to you. Again, we're building a phenomenal business for our clients to be able to sell their diamonds worldwide. And for the next 10 years, we anticipate making a tremendous amount of money for our clients in the diamond market.
Featured Diamond of the Week on the website and the newsletter. You can get our newsletter from Harold and connect with him, 1-800-432-1022 or rarecoloreddiamonds.com. It is a .30 carat radiant cut, fancy, intense pink argyle. Get the Bloomberg interview from Harold as well. Connect with him at Rare Colored Diamonds, 1-800-432-1022, hsfineauctions.com. Next auction, October 21st, 8 Eastern, 6 Mountain. You can go to the website and sign up right now. For those that listen to our radio show in Edmonton, don't forget, next week we're on at 2:30 to 3:30 due to Edmonton Eskimo football. There's only one company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. That is Worldwide Precious Metals. They're going to be in Toronto in October. If you would like to book a private information session with them, give them a call at 1-866-623-2002 or go to their website, wwpmc.com. Remember, start your own precious metals investment account today with Worldwide. You get instant liquidity in and out of the market with a phone call, secure storage insured to the full value of your investment, 24/7 online access, and obviously at the same time you'll be using and have the knowledge of a precious metals expert from Worldwide Precious Metals. As we touched on last week with that story in the newsletter, in Cyprus, the bank depositors losing 47.5% of their money. Now's the time to get some money out of the banking system. And Worldwide wants you to know that their precious metals are allocated, either wholesale or premium, and they have a new program. They can actually now store premium bullion specified in coin and bar form in your precious metals investment account. Connect with them, 1-866-623-2002 or wwpmc.com. Harold, we have about a minute left. You take a look at what's happening in the world. Greek unemployment, 27.5%. Youth unemployment there, 65%. Jobs created in the United States, predominantly part-time. 40% of workers really living below the poverty level. It's a difficult time.
It certainly is. And again, knowledge is important. That's why we put out the newsletter every week. That's why we do the radio show every week. So, again, all we want is for the listeners to our radio show to do well and to get through these difficult times. And I hope, that the information that we give you each week is helping you with that. If you need any help, you can call me directly. I speak to clients every single day. And again, Randy and I care, and all we want is to see everybody do well. So I want to wish everybody a wonderful weekend and a very profitable day.
Thank you very much, Harold Siegel.
It's my pleasure.
Connect with Harold, 1-800-432-1022, rarecoloreddiamonds.com, hsfineauctions.com. And I should remind everyone, 2:30 to 3:30 in Edmonton next week on 630 CHED. Do not miss the show. Precious metals, on the precious metal side of things, speak with Worldwide, wwpmc.com, 1-866-623-2002. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.